All right, governmental expenditures, capital projects fund. During the construction process, encumbrances, so encumbrance, whenever you see the word encumber, think committed. Synonyms in your mind definitely need to have that as synonyms, so it immediately comes up and you don't forget. So encumbrances are recorded as commitments as incurred, just as expenses are recorded as commitments as incurred in corporate accounting. Also, vouchers payable, also known as accounts payable, are recorded when the government incurs a liability, just like corporate accounting, and the expenditure is known. Just, hey, wouldn't you know it? I talk about it again. Well, why is that? I mean, it's almost as if I wrote the dang thing. Yeah. It's just, and this is coming up. As soon as I read this, this is what's clicking in my mind, right? This sort of thing should click in your mind too. You go through it enough, you practice it. So just as accounts payable are recorded in corporate accounting, same exact process. So as vouchers or payables are recorded, encumbrance commitment entries are reversed. Lastly, when payments are made, we debit vouchers payable, you debit AR, and credit cash. What did you know it again? Just as we do for reducing AP in corporate accounting. Lastly, expenditures in the capital projects fund are usually classified as a capital outlay, which is one of the major character classifications in terms of what we'll see. Awesome. Just awesome, right? Sitting here in absolute awe and disbelief at how amazing this is. Bunch of journal entries here. Let's see. Well, we've got a journal entry to record several contracts signed for construction. So we are the government. We want a bunch of construction completed. So, well, what do? We want to restrict that money. We want to commit that money. We want to encumber it. So we debit encumbrance. It's a little bit different from expense, right? That we're just committing the money to it. And we credit budgetary control. So, definitely a good level different from corporate accounting here. What about journal entries for one completed contract approved for payment? So this is several contracts. Now we have one contract for 1.2 million. This is to reverse the encumbrance. So once it's approved, because in the government, right, we've got the whole approval process. You got a whole bureaucracy. So if you want something done, you better encumber that money so no one else uses it for anything else. That's the whole purpose of this, right? That's the whole purpose of encumbrance is, politician A wants to make sure the money's restricted for something else. So politician A, he or she is going to just, boom, encumber it. Now, once it's approved by the whole government, then you unencumber it. This is just, it's like making a reservation at a bunch of different restaurants, right? You make reservations at a restaurant and then you remove the reservation once, you're going in, you're approved. Now, just when you actually purchase or construct the assets, this is the normal journal entry, right? Expense and vouchers payable, accounts payable, or cash. Normal business process. The only difference is this specifically is government, right? This is more government focused, not really in corporate.